Alright everyone, Cowboy Trades here, welcome back to the channel for another update. So it's looking like the markets are about to nuke, Bitcoin is rejecting from the 200-week moving average, and the stock market is losing this crucial line of support. I'm going to get some more updates out later on today. This is going to be a quick one because I want to focus on the main important charts that you should keep your eyes on. I'll also show you the lower time frame, starting off with Bitcoin. On the 4-hour, you can see that Bitcoin has just got rejected from this bullish pennant pattern. Now obviously this is just the name of the pennant. You can also call this a symmetrical triangle, but we've come up to the lower trend line on this, touching the wicks, touching the wicks, flipping as resistance. Obviously broke down from it, flipped as resistance right here, and we are looking like we're moving down pretty badly for Bitcoin. On the 4-hour, we've got a red, green, red formation. And if we do quickly clear up this chart, this looks exactly like a beautiful bar pattern to me, with a price target all the way down here highlighted at $21,400. I did post this a little bit earlier on my Twitter, so make sure to come and follow me over on Twitter at 618_cowboy. I do post these charts in advance of some of my YouTube videos. Now, getting into the most important metrics that you should be looking at right now, your equity markets and Bitcoin. Like I said, Bitcoin has just been rejected from the 200-week moving average. We're about 5% down since this retrace, but where this really gets nasty, let's focus on the lower time frames for the equity markets in just 1 second. But the S&P 500 on most charts has just lost this crucial trend line, which we've come up to many times. As we've previously discussed on the channel, we exceeded this trend line. We told you this was a liquidity grab. These blue lines here correlate to corporate insiders selling their stocks, and they've previously sold at the pretty much exact tops, and they sold once again at the exact top of this, at least local top. I believe this is the top. If we're looking at the S&P 500 chart on Black Bull, we've just broken down from this trend line. If we're looking at the daily, you can see we've got a red, green, red, looking like we're setting up for some beautiful continuation back down. If we're looking at the SP chart for the S&P 500, you can also see this same trend line in play. Bear in mind, whether you're buying the S&P 500 on different exchanges, it does range between slightly different prices. So you can see over on the SP chart as well, we have lost this crucial trend line. However, when we do come over to the CBOE chart, we are actually sitting right on this trend line at this moment in time. So if we do come over to the daily on the CBOE, you can see this is your last line in the sand. If the S&P 500 breaks beneath 3,960, there is absolutely no S&P 500 chart that the bulls can pull up to say we are above support at this moment in time. It is really not looking good. We're breaking all sorts of patterns, bump and run patterns, and if we... I'll show you the lower time frames just very quickly to show you this bump and run pattern before we do head over to the Elliott wave theory. Like I said, it's going to be a quick one today, but if we look at the 4-hour chart for the S&P 500, just like we showed you the 4-hour chart for Bitcoin and highlighted our price target, if we do come over to the S&P 500 right here on the 4-hour time frame, looking at the E-mini futures, as we've discussed, we've got this trend line. This was actually your bump, because if we do come over to the weekly time frame, clear up these drawings, you can see we did have a higher trend line right here playing out. So depending on how you draw this, and then we had a new trend line, which was the bump. So this was the run pattern. I've fat fingered it a bit, but you get the gist of this. This was your this was just your normal trend line. This was the bump up. We've got rejected, and now we're falling beneath both of these trend lines. There's really no support holding the S&P 500 down at this moment in time. And also, like I said, be sure to follow me over on Twitter, because I do post these a lot of the time before I do hit the record button. And we have started moving down dramatically since I started recording this video. So my price target for the S&P 500, as you can see, we've got a nice bear flag right here with a price target down at 3,928. And you might be thinking, hey Cowboy, from where we are right now, the S&P 500 will only break down 1.4%. So how does that mean the markets are going to nuke? Well, this is not my higher time frame price prediction for the S&P 500. If we zoom out, you can see there is a beautiful price gap that needs to be filled down here for the S&P 500 at 3,605. It's a bit hard to see on the weekly. If we do come over to the daily time frame, you can basically see we had a bearish candle body close down here, and we wicked all the way up to here. So technically it's right here. I think I've accidentally moved this at some point in time, but we do need to come and fill this price target. On the daily time frame, we closed on Friday down at 3,584. Then we proceeded to have a candle body opening on Monday at 3,639, and we never came back to fill this price gap indicated by this light blue line over here. So we've talked about this price target before, so if you're a veteran of the channel, this shouldn't come to any surprise. We have started moving down since I talked about this, but from where we are right now, you can see that we've got about another 10% drop down for the S&P 500, which is a huge move for the S&P 500. Obviously for Bitcoin, we've already highlighted this 10% drop. You can also see there is this macro trend line that we will obviously need to come back down to at some point in time. So if I show you the Bitcoin chart, you can see, boom, this macro trend line, about another 13 or 14% drop for Bitcoin. And as we've got a BART pattern, you know, it looks like we've already established the spiky top. You know, can we have another bounce back up to 24,000? Sure, it's possible. This is, you know, the whole point of the spiky BART pattern. You have these spikes up and down, but when you do finally decide that you want to start coming back down, you are going to come back down very, very quick and in a fast way. So wrapping up the video, I do also want to show you one more chart for the cryptocurrency markets and one more chart for the S&P 500 before we do conclude on this Elliott wave theory. But as we've discussed before, this asymmetrical triangle 5-wave continuation pattern, you've got the bull market top for the S&P 500, you've got a bearish 1, 2, 3, 4, 5 wave to the downside. We've then proceeded to put in a 5-wave asymmetrical triangle, which after a 5-wave to the downside is a typical bear market continuation pattern. You've got wave A, B, C, D, and E. If we come over to the monthly time frame, you can see, as we previously discussed as well, wave E in terms of the monthly candle body closes are beneath wave C. So even though, as we also discussed, I've probably said that so many times this video, we did have a throw over with, on the daily time frame, wave E exceeding wave C. I do believe this is a massive throw over because of everything that we have discussed on the channel previously. A lot of degeneracy going on in the markets right now. But in general, what you need to know is I recorded a video yesterday, which was published this morning, called S&P 500 Elliott wave theory, talking about how we're literally sitting right in this triangle, and this is a very, very important decision time to be made. And if we come over to the daily time frame, once again, you're seeing this same pattern on every single chart we've looked at today, a red, green, red, which is a bearish continuation pattern. You can see the last time we had a red, green, red, we had a nasty move to the downside. On the opposite side of this, you can see a green, red, green formation. These present the absolute opposite. These are typically bullish continuation patterns, although do bear in mind, nothing is 100% guaranteed in trading. These don't always plan out, but you know, pairing everything that we've looked at today, the S&P 500 is really losing all support. So if you are a bull and you are hoping that, you know, there's some chance that the S&P 500 holds in there and subsequently Bitcoin makes it, keep your eyes on 3,960. If we break this, we are screwed. Now, coming over to our final charts, starting off with our last stock market chart for this video, the iShares TIP ETF, the Treasury Inflationary Protected Securities. These are a leading indicator for the rest of the markets. We've discussed this many times on the channel, so I won't talk about it for too long. The TIPS broke to the downside, S&P 500 was still pushing up. The iShares TIP ETF, being the Treasury Inflationary Protected Securities, broke to the downside, and it took a while, but the S&P 500 and Bitcoin, your equity markets, broke down to new lows while the bond market were surging. And right now we've had one throw over followed by another throw over out of this pattern, causing an M pattern and also a double top on this trend line right here. You can see we've got a touch point, touch point, touch point, touch point. This is looking like a double top M pattern. 2 failed move equals a fast move in the opposite direction outside of this bearish pennant. So it looks like we're solidifying this rejection for the iShares TIP ETF. And of course, with the TIP ETF looking like it wants to break to the downside of this bear flag pattern very, very soon, because we're literally not sitting very high above the lows. We're 2% above, or we're 2% away, 2.16% away from making new lows. Oh, sorry, I've measured it the wrong way. Yeah, 2.11%, 2.18% of the way away from making new lows for the iShares TIP ETF. Your S&P 500, on the other hand, is, you know, a very, very long way away from coming back down to these bear market lows. It's about 10% away, so it looks like there's a lot of room for the S&P 500 to move down, with the leading indicators like the TIP ETF breaking down, with everything else we've paired this with. And wrapping up on our final chart for the cryptocurrency markets, you can see the total cryptocurrency market cap. Basically every single crypto market cap is summated in in this. You can see since the all-time high, you've had a few macro tops, and it looks like we're coming in and putting in another macro top from a lower high position. And for the total altcoin market cap, we've even got an extra data point on this. Altcoins are showing extreme weakness. We had a top, we had another macro lower high, we had another macro lower high, and then as you can see over here, these are more like 2 mid to lower time frame highs. Bear in mind are on the weekly, but the altcoin market cap is just showing extreme weakness right now. I do believe altcoins are getting ready to absolutely nuke to the downside. So all I've got for this video, my friends. Like I said, the markets are looking like they're about to absolutely melt through the floorboards. I've already got a trade on Cadena. I am shorting the market right now. I may look for more short positions in the immediate short term. If you want to keep up to date with those, make sure to turn notifications on for the YouTube. And while we are wrapping up this video, I just wanted to say thank you very much for 9,000 subscribers. We're getting very, very close to 10,000. So I just wanted to say thank you very much. I appreciate all of you. But for today, that's all I've got. As always, my friends, if you do enjoy the content, let me know down below by leaving a like and a comment. Share the videos with your friends. And if you want more of my posts, charts, memes, economic data, price targets, chart patterns before I start recording my YouTube videos, be sure to head over to Twitter at 618_cowboy. For today, that's all I've got. It's been your boy Cowboy Trades. Thank you for 9K. See you at 10K. I'm out. Peace.